All right, my friends, welcome back. How is everyone? So, we had another rejection at the range high. We've come down exactly into that 90K level in the daily trend I was discussing in the last video. Go and watch that if you want more update on what that was. But that's come bang on to the level. I'm sort of seeing like a lot of bearish takes on the timeline again. Everyone's saying, all right, so over, we rejected the range high, it's all done. I disagree. I'm still bullish, and I'm going to cover why that is. I think this range high rejection is different to the last ones, and I'm going to cover what that is in a sec. I'm also going to go over USDT dominance again. I think it's showing more sort of breadcrumbs where we're going to lead, and I'm also going to cover sort of the main altcoin I'm looking at the moment, which is outperforming on ratio pairs and also on the dollar pair. And I think if we get some sort of uptick in the market, we're going to see this thing do quite well. So before I do that, please like and subscribe to the channel. I'll give you a second to do that down below. And let's hop into it. All right, so first up, BTC. A lot of bearish takes, It's so funny to watch Twitter, how sort of polarizing it can be. You see even the same accounts that are just, absolute bulls one day, and then the next day, like, it's so over, we're going to 60K. It's funny to watch. So what I want to get into here. We did indeed reject at the range high, which we were discussing last time. We pushed up into it, saw a nice rejection, had this bullish pin bar candle in the middle, could not get above. We sold off. Where did we come down into? That 90K level. Why was that important? Well, if I just get rid of the drawings for a sec, you can see 90K is the first retest of the daily trend since flipping it. Now, if we go down to something like the 4 hour, you can see why that level is also important. You can see here, if I just get rid of now the indicators, it's a very clear support resistance flip level. So you can see all the way over here, starting back pretty much 5th of December, 6th of December. This has been a highly respected level. So we were trading support, we lost it, resistance. Finally we got above it. Once we got above it, what do? We sent straight up into the range highs. So this is the level to be defended. Now, why is it also the level to be defended? Because of the daily trend. Now, what I want to see is us not to lose the daily trend, because we lost the daily trend back in the 27th. No, actually it was over here, wasn't it? The 12th of October, 13th of October, we lost the trend and we have failed to get above it since. Now this shift is different. So all I want to see, I don't want to see us get back under this level, 90K. I don't want to see us lose the daily trend. If we start doing that, and I say with a fair amount of confidence, we're probably going to come down and test the range low again and maybe just continue this bracketing. And this was just some sort of exuberant, New Year's open pump. But all it did really was just get us to the range high. Because you need to treat this for what it is. We are still just in a range. There's no reason to start making your plans for financial freedom just based off this latest pump. We're in a range till proven otherwise. We start getting above this range, we start following trend up above that, then we can start talking about buying Ferraris for our dogs. But until that happens, we just play the rotations. Range low to range high, simple as that. What I wanted to say is the bearish takes on the timeline at the moment, sort of the title of the video, right? We need to play this for what it is. So if we just get rid of the drawings, we can see each time we came up to these range highs, we pretty much formed this little cluster over here. We can even see it on the H12 a bit better. Formed this cluster of supply over here to the left around 17th November. Then we sunk below and we started to form this range down here. So after that happened, we came back up, we sort of retested that level, rejected again, sort of had a mini rejection over here too. This to me said, right, this is basically the sort of range high area. And you can see, if you just basically look at the VRVP on the right-hand side, this is where the gap starts up into here. And pretty much from the range high down to the range low, you can see this big amount of volume transacting. So, we can draw this a simpler way. I was doing that like a dummy. But if I just wanted to draw from here to here, you can sort of see where the main points of volume are in this range. With this in mind, we'll go back to the daily. Each time price came to the range high, people had every right to be bearish because we're retesting the daily trend from the underside. Just like all the times we had up here, we just rejected each time. Now, every time we came into here, if I was range trading this, I was taking profit here because we're coming to the trend as well as the range high. Trend plus range high, 1, 2, 3 taps. The fourth one rejected, back down to the lows. What happened? We came up, retested daily trend, we broke down. Retested daily trend, we broke down. Now, why this shift we're having now is different is look at the compression we formed. Every time we were, basically since, let's say 18th December, we had that bottom. Every time we came into the daily trend since then, the daily trend is starting to flatten out a bit more. It's not going such a downtrend. Also getting this compression here. So seeing prices compressing into it, it's wicking down. So we're wicking up into it, sorry. We're getting sold into, but prices refusing to push lower from that. This is what I was saying on the last video about bears getting a bit too comfortable with the failure to push up. But they were neglecting the fact that price is also failing to push down. Now, what usually happens to that, like I said last video, my favorite play is these compression ones. When you get that compression between a diagonal line and the trend, one's going to win. Obviously, diagonal one in this instance, we got above it. This is why this time, despite all the bad takes on timeline, everyone's saying it's over, I'm still bullish because we were testing the daily trend from the upside. And yes, we rejected at the range high, but we don't have the confluence. Now, when we rejected from the range high here and here, the daily trend was there. Rejected this time from nothing, with the daily trends below us. So we're coming down for the first retest of the daily trend since flipping it. Now, I will say it is a bit too fast for me. I would have liked a bit more time and space around here before coming down to test it. That would have been more healthy to me, but we just play it for what it is. Even on the daily here, like this bullish pin bar candle, looks quite good. Nice big SFP to take out some lows. Now, what we are fighting with is the 4 hour. So this is potentially sort of our first line in the sand, time frame wise, we need to be concerned about. Nice move up, we are coming straight to the 4 hour trend, and we are rejecting it. So what we really want to see, I think the H1 looks promising, but the 4 hour doesn't. We can actually see with my multi-time frame table thing at the top, it kind of tells you when stuff's above trend, green is when it's inside trend, and red is when it's below trend. A healthy trend is seeing everything blue, like for an uptrend, and healthy downtrend is seeing everything red. You can see right now there's a bit of indecision across, so it's sort of just chopping. But anyway, what I'd like to see is to get above the 4 hour trend. We do that. I think we're coming for the range highs again, and I want to see us get above that for consolidation up, and then we're looking for that move to 100K. If we go to the 1 hour here, the 1 hour looks better to me, but it's sort of just stalling based on the 4 hour. Now, why do I like the 1 hour? Because of the confluence as well of the 200 EMA here. Now, this is one of my bread and butter setups for my system. So when we get the local trend, the money noodle, lining up with the 200 EMA on whatever time frame you're trading it on, and then you basically have the support of both, and that generally gives it a lift. Now, I'm not saying this is going to, because we do have the 4 hour above us, even though we have the confluence here of the 1 hour, yes, sorry, I should check that. Even though we have the confluence here of the 1 hour 200 EMA plus the 1 hour money noodle, the 4 hour is still more important, just simply because of hierarchy. It's a higher time frame. So the kind of, you can see it from the table up here, there's indecision, but we are above the 1 day trend, testing it from the upside. We are bearishly retesting the 4 hour trend, and we are bullishly consolidating above the 1 hour trend, which looks like potentially it could get lost. So we don't have any sort of clear guidance yet. But sort of that's what I'm looking for here. I want to see the daily trend hold. If 4 hour rejects, we start to come back into the daily, we start to lose the daily. Then that to me says we're just going to continue chopping, continue ranging. So if we lose the trend here, I would just turn it off, and then we just look to play the range rotations. Range lows to range highs and vice versa. We just play that for as long as it remains in value like this. And eventually we're going to get a breakout to one side, maybe it's to the downside, we can play that. Or maybe it's to the upside, we can play that. Lost my paint tool, but whatever. All right, so that said, BTC. Some stuff from the last video. So this has played out exactly as I sort of said it would. It hasn't played out yet, I should say. But it is coming into that trend. So what I was saying in the last video, I just left all the squiggles up from the last video too. We're looking for this line to come down and act as support, which it did, this box we drew. We're looking for a bounce up into the daily trend and hopefully a rejection. So this is USDT dominance. If this rejects here and starts to do what the squiggle's doing and accepts under this level, then we're going to see a pump in the market. If this starts to flip this trend here and starts to mark up again, and we could just say this was a deviation of the daily trend, and then we get back up and we start trending up it, then obviously we're going to see a bigger sell-off in crypto across the market. So hopefully we don't get that. I hope this is what plays out. I'd love to see this reject. I'd love to see it come back down and accept under this level here. And then we want to see this downtrend, and we should get that lift in the broader market for crypto. Now total, pretty much doing exactly what I said in the last video as well. We had that bull div play out, and I said it will probably come up to the money noodle and find some rejection. So that's what we're doing so far. This is just the squiggle from the last video. You can see printing this gray candle here, this down candle. We really want to get above this. We'd love to start trending above trend, just like we did over here. We had this like brief consolidation period. It's actually about a week and a half because it's a 3-day chart before marking up. So I'd like to see that here. I'd like to see us get above trend on the 3-day. Maybe we just have some sort of sideways grind for a week or two, and then we start to push up again. So let's just see how that pans out. Now Ethereum, I'll be quite quick. Sort of same thing. Daily trend here, retesting it. We do have this pretty clean support resistance level down here. We also have this diagonal we're grinding up. I think potentially we could look for some sort of entry down here at around 30.30, maybe the confluence of these two things. And it's a pretty simple line in the sand. So we start to lose that, we can pretty much look for a short, maybe down to the range lows. Have to see how it pans out. ETH doesn't look as attractive to me right now, but I think this can be a good one. So anything around 30.30, you're basically looking to take profit up at the range highs at around 3,300, give or take. The reason for that is we also have the 100 and 200 EMA on the daily confluence there. So we're not just going to blast through that willy-nilly. There's a lot of dynamic and static resistance there, and that's where I'd be looking to take profit. We start to get above this, consolidate, we look to just ride those trends up. So it's still early days. You haven't missed anything yet. Even if you missed the move since New Year's Day, it doesn't matter. There's going to be opportunities. Just don't fret too much. All right, now for that coin I was talking about, it is Solana. That coin I think will do very well if we get a pop in the market. Now the reason for this is, let's go to the weekly chart. Weekly chart, this level has been support since 2023, 25th December in 2023. So a good few years this has been support. And you can see the amount of support it's had. Like this is just the line in the sand. This is the GOAT line in the sand. Each bounce has been bought up. Admittedly big deviation here. What happened? Deviation, reclaim, retest was like picture perfect. And then we sent up. Now we have reclaimed that weekly trend again. So this is sort of the first thing I was watching. I was seeing some relative strength on Sol this morning, which made me investigate it more. At the same time, we reclaimed the daily money noodle, the daily trend. Now we do have this range high up at the top at around 144. That's fine. We want to get above that. I think if you want some confidence in buying this, you just wait till we flip this. This is how simple my system is. I just wait for levels to be reclaimed. I wait for trend to be reclaimed. I don't care about buying tops or bottoms. There's no glory in it to me. I simply don't give a shit. I think we just ride the trend when it presents itself and we keep ourselves out of getting chopped up when it doesn't. So for me right now, yeah, I think, if you want to be sort of conscientious, you can wait for a flip of 145, this support level up here, this resistance support level. Otherwise, you can look to sort of compound positions, maybe down towards that weekly level again or at the weekly trend. And then, sorry, the daily trend, I should say. And then the obvious invalidation of that is starting to lose that weekly level. So I like this too. The invalidation is pretty clear. It's that weekly level we don't want to see lost. You can even use this low over here if you want. Now, I'm not just basing it based on the daily trend reclaim because plenty of stuff has done that. It's actually the ratio charts, which is what I'm finding interesting here. So if we go to Sol BTC, we can see this diagonal broken. So this is also at a weekly support resistance level, a very clean one. What do? We came down, we formed this divergence here. Nice big diagonal. It's not really a clean diagonal because it's making lower lows. My textbook breakout diagonals that I take from momentum trades, you want to see the higher lows form. But for this anyway, this is just showing a clear downtrend, which is broken. We switch the trend back on. You can see the daily trend also being reclaimed on that. Retested multiple times, trending up nicely. Now, if we look at the Sol ETH pair as well, that was Sol BTC, this is Sol ETH. Same thing. Down to this very key weekly SR level. We had a nice bounce. We have a very clean diagonal level there, broke above it. Also, we are reclaiming and sending right above the trend. So what we want to see now from a perspective of all these things is the trend to come up and this just retesting it the whole way. So I think the dollar pair looks strong. I think the ratio pairs look strong. And therefore, I think if we get a lift in the market, I think Solana is going to be a fairly decent performer because it has been down the dumps for quite a while. So this is something I'm going to look to build a spot position in if we start to get that breakout of BTC and that move towards 100K. And I may even start to build a position sooner than that based on this, but I'm not going to jump into it too quickly. I'm going to either wait for confirmation on a close above the range highs here at around 144, 145, or I'm just going to simply compound on daily trend retests as we come into it. So yeah, that's pretty much the video. Obviously I talked a lot about trend today. This is the money noodles, an indicator I have in the Mars High Club. The link's in the description if you want to join. You can get access to that. I'll also be releasing stuff like the multi-timeframe table. I've got a trailing stop loss indicator coming as well. Basically all these things are going to culminate together and become a full trend following system. So you have basically your criteria for entries, your criteria for TPs based on gap fills with EMAs. Quick scanning, going through watch lists, you can use this table at the top to see what's in a heavy trend versus what's chopping versus what's in a heavy downtrend. And also the trailing stop to sort of, just give you in a parabolic or just heavy trending market, have those stops you can trail up on the way to keep yourself out of trouble and keep yourself locking in profit. So once again, links in the description, you want to check that out. Other than that, I will catch you guys after the weekend. I hope you all have a good one and thank you for joining and I'll see you then. Cheers.